Hey, it's Saul. It's 9 p.m. on July 4th. This is the Stock Market Trading Watch List for the week of July 4th, 2011. This week, I'm going to go back to what this video was all about, which is just looking at some stocks and talking about them and talking about the structure of the stocks and what to look for. This got into basically like a focused list or a target list, as I like to call it, where, give out entries and stops and management, and that's fine. I mean, a lot of people were real happy about that, and I'm still going to do that, but I really want to go back to the roots of this video, which is to talk about the market in general. Now, last week, I can't show you, I forgot what stock we stopped down on, but last week was a net of a half a unit loss. We'll talk more about that in a little bit here, but my TC2000 is down. I think it's because of my credit card. It was working this weekend, and now all of a sudden it shut off. And I think they tried to bill me, and it didn't go through because my credit card expired. So I'll handle that tomorrow. I managed to export all the stocks I was looking at, except for the viewer request. So that's going to have to wait another week. Last week I didn't do it either. I got some people writing and said, hey, what happened? But that was the internet issue last week. This week it's my charting program. It's my scanning program. So I'll go over the one stock that I'm looking at, and I just want to look at a couple other stocks here. So VPHM is Viral Pharma. I mean, this is just a textbook break, in my opinion. Volume rose as it broke above the moving averages after a nice little double bottom at the 200-day moving average here. Okay, I don't chase these kind of expansion moves, but everybody's talking about volume going down into the holiday, including myself, and this one actually showed some volume expansion. So I'm going to watch for a pullback or a pause here, and I'm going to look for this to retest these highs. But there's no trigger here. I'm just talking about it in general. Apple is another one, just beautiful. It was lagging the market in the middle of the week because there were rumors that Jobs was back in the hospital, but broke out really nice on Friday. Volume came up above the 50 days. Still low relative to these levels, but I mean, look, it's right before the holiday, and a lot of these super gurus, they call the death of the market. We're in serious trouble, folks, and it's just a con to buy their service, right? To buy their super special list of shorts. And I know Apple was touted as a real, this one's in a lot of trouble, and then it goes down like for 1 or 2 days, and all of a sudden, oh, okay, it's at its target. I mean, that to me doesn't sound like a lot of trouble. It never even tested 300 here. But this looks bullish here now. We're back over the 200, we're back over all the moving averages, and we're setting up, okay, still in a bull flag. You can see the weekly chart here. That's not a beautiful, perfect parallel chart, but, I can mess around with it, and, this looks like this could be ready to go and try to test 400. Now, I don't chase this kind of stuff, so to me, yeah, maybe it'll go to 400, or maybe it'll back off and back down. But after expansion candles like this, I look for digestion. Then what I would like to see Apple do. Okay, if I was an Apple bull, all right, I would like to see it chop higher up into this line. So I just adjusted the line here. Then form a breakout pattern there, pull back a little bit, whatever it is, and then break out with volume. That's what I'm looking at for a stock like Apple. Okay, you can see Google, another one pronounced dead by many. A nice 5-day squeeze, bing. All right, 78.6% retracement of this swing that I had been watching. It broke it 2 Fridays ago, and then just trapped everybody. So this is a balance area that needs to be watched, because we could get some digestion here. I mean, we're supposed to churn for at least a couple of sessions here as we work our way through this, or if it rejects it and we head back down. But I'm watching this trigger point here, the level that we broke down off of here. Okay, 542 and change. If we could trigger up above that, I'd be watching the 200-day moving average. But there's no set triggers yet. I want to wait and see what we do around this area. If we just rip right through it, I'm going to be really nervous there, because I don't want to see it rip right through it, because that could be an exhaustion move, and then we could turn back down. The best thing to happen here would be some sideways consolidation. Okay, so it's just a couple of stocks I'm looking at. Here's RIM. Okay, it just continues to act like doggy do. Even last week when the market's running, this just barely was. I think it was barely green on the week. Just brutal. Goldman Sachs. Okay, nice last couple of days. The first 2 days of the week, when the market was running, Goldman was falling here. So, I mean, you have potential resistance here. Then you got the 50-day moving average, which is racing down here. So we're watching that as potential resistance there. And let's see what else we can look at. Caterpillar. Okay, just a beautiful doji at the 200-day, off to the races. This was diverging as the market was coming back down to test its 200 on the SPY. Caterpillar was just like, nope, higher low, and then just boom, off to the races here. So overall, I've been saying I don't think we rally strong, or I definitely don't think we dive strong. Everybody was calling for the death of the market, and I was like, let's see. I mean, I thought we would go a little bit lower. That's why last week we were bearish on the watch list, and then I just backed off, obviously, when I saw it. Market was pushing it right up into the bear's face. But I thought we were short-term overbought, and there was a good chance we would go back down and target the levels that I had been watching. And for those of you who follow my S&P 500 video, I posted on the blog, I was looking for one more retest down, a little bit lower than the 1250 level, wherever it is we had bottomed out on the last time. And then from there, I thought we could get a nice rally. And once again, I didn't think we'd get a new leg up. I still don't think we do. I think we're more range-bound than anything over the summer here. But I think right now we have to wait and see. I think we have to see how we back and fill. And there are a lot of stocks. I mean, you got Caterpillar, Google, the stuff I just went over, that if the pullback is nice and light without a lot of downside participation, they're going to set up buying opportunities. So anyway, stock I'm looking at is a short. It is iRobot Corporation, and this thing has had a nice little run up here. Volume is light. It's under the 50-day, and you can see for the most part it's been declining on this move. So to me, this says that it should at least pause at the 78.6% retracement. 36.84 is the 78.6. So we're front running it by a couple of pennies, and I don't mean front run illegally like some of these guys do. I'm talking about front running it, in other words, putting in a couple of cents before the level. So 36.81 short, 37.87 stop. Move stops after a 45-cent gain is seen in the trade. Half off +1, and the other half off +3. Looking for it to pop into the 78.6% retracement and then pull back to the moving averages. So let's see what sets up on this one over the next few sessions. Have a great trading day on Tuesday. I appreciate your feedback. Feel free to contact me and let me know if you like this style better than just going over the quick watch list. Problem is, of course, people tend to lose interest in these 8-minute videos, or I've been known to do 20-minute videos. So I try to keep them short and sweet, and I'll look to do that with these going forward. Okay? Have a great trading day on Tuesday. I'll talk to everybody again tomorrow.